here at the TradeCaptain.com, and it's a webinar where we take a look at Bitcoin, Eurodollar, gold, West Texas, crude oil, and the DAX 30. So it's sort of the perfect market update if you're interested in trading and want to know from an experienced trader like myself which levels traders are focusing on in today's session. As well, we're going to talk a little bit about the macroeconomic stories that are driving and underpinning these markets, and see how they may affect the prices that we are trying to trade. Now today we're starting much later, as you can see it's almost like 10 o'clock. We usually do this webinar at 9 a.m. London time, but today I had some meetings outside of the office, and that delayed the start. And I mentioned here also that I was going to start at 11:30, but I managed to finish up my things way before I thought I would do, and that's why we're doing it now at 10 o'clock. Tomorrow though, we'll be back as usual at 9 a.m. London time. Just go to TradeCaptain.com and live trading room. Okay, before we start looking at the charts, as always, I need to stress that trading financial markets is unfortunately risky, and it's a genuine risk that we lose all of our invested money. That's just the way it works. Nothing is free. You need to work hard for it, and it's the same thing with financial markets trading. If you like this kind of stuff, don't forget follow us on Twitter at TradeCPT, as well on Facebook and on YouTube. And as well, if you like technical analysis like the one I'm going to present to you guys here, then don't forget to check out the technical analysis section. And my name is Alejandro Zambrano. I'm the chief market analyst and the chief editor here at TradeCaptain.com. Before joining TradeCaptain, in essence, setting up the website for Amana Capital, I used to be the chief market, the head of the London desk of Daily FX and FXEM. Alright, let's begin. This is the euro versus the USD, and the market is slightly up today. It's up with 35 pip, as you can see here. Market is a little bit higher. Didn't really know exactly what I wanted to do, but it's going up. Now, I wouldn't get too excited about this move. As you know, the market has been trading sideways since late January between 120, 155, and the actual high is 125.59, and the overall trend is bullish, so I do think the market could hit higher. But tactically here, we need to wait for a correction down to 122.49. Looking to buy here with stops below support. The alternative is a break to the upside. Break the upside, this market could potentially continue to head to the upside. Here's the price of Bitcoin, and Bitcoin is doing all right. Bitcoin's ended its downtrend when the price took out the March 3rd high last week on the 12th of April, which was Thursday. We took out that high, and the market is up slightly. This is a logarithmic chart. If I get rid of it, it looks like that, so not necessarily a major difference, but it's always interesting. You see this is a Fed low, and the market bottomed out at the Fed low, sort of ended its downtrend, and I think this market, obviously in the short term, could easily revisit that breakout level. But as long as trade above this level here, which is 6,363, I think this market could correct further. I mean, I think first target is 91.77, followed by 9,860. So further move to the upside. And it's actually the first time I'm bullish for a very long time. In fact, I turned bearish here. The market moved to the downside, and since then I've been bearish up until this break here. Now in the short term, again, as I said, the market could go a little bit lower. It wouldn't surprise me if we try to correct down to the breakout level. Say the actual breakout level is at 75.30, but say that we correct 50%, so that leaves us at 74.19. And then from this level, I suspect here it's going to look to go long again. I think we're working with some sort of a short-term uptrend here, and let me see if I can get this line. Some sort of situation like that. Okay. Here's the price of crude oil. We had some amazing setups here for you. You said a few weeks ago, buy here, stops down here, market to head to the upside. It clearly did. Now the market took out the high, and I've been cautious about buying here. Doesn't make sense to buy at a high. Sometimes you can't do that, it's fine, but what I've been saying here is wait for a correction. And if it looks like we're having a correction, so if we have a 50% correction down to 64 to 78 or so, I think that will be fair. And from this level, pretty much, I suspect traders are going to try to rebuild the position in this whole section here, and as long as it's above 61 to 71, then there's no real reason to change the bias. Here's gold. Gold is not doing too much. I mean, we did have the military action against Syria. Not much happened. In fact, stock market's gapped a bit. Dollar yen is a little bit higher. I think key comments from the US and the UK government is that this is a one-off because of the use of chemical weapons, and most likely they're not gonna do anything like this again, unless, of course, we have unless Syria uses chemical weapons once again. Of course, we don't know exactly what's going to happen with the Russians. Maybe they'll try to retaliate, but that obviously, I think that would be foolish. Obviously, the Russian economy has been bad for many years. Their army is obviously powerful and strong, but they're in no way right now in a situation where they can, fend off France, UK, and the United States, and then of course you have NATO. So there's no way that's going to happen. It would be, I think, it would not be ending good for none of these countries. But yeah, obviously the Russians probably not that happy that they moved ahead. But the Russians are winning anyway. I mean, they're working with Assad and Assad, and most likely, I mean, they're on the winning side anyway, so I think they'll take this and just move along, because they're still reaching their objective, and the Americans and the NATO is not really interested to do anything about that anyway, so they just want to stop the use of chemical weapons. At least that's what they want to do. So I guess that's why we're not having a big reaction in the markets in general. Now going forward here is a bit like the euro. It is possible to buy in a dip. I would advise against it though, because when the markets are choppy like they are, it's really difficult to do anything. I mean, it's difficult to trust these levels. The market could go down, you get yourself stopped out, and then the market bounces back into the middle, and then, yeah, you just lose a lot of money in time. So what's sort of the best scenarios then? Well, I think the best scenario is to wait for a break to 1365 and maybe 1376. With crude oil gaining the way it is, we're going to have higher inflation at one point. The alternative is that what a lot of people are talking about as well is that the US is raising interest rates so much now, and eventually that's going to cause the economy to tip over and head into some sort of recession. That is, again, could be some other reason why people will buy gold. In fact, a lot of people are positioned and anticipating higher gold prices, but we're not really seeing them. Again, if we take out 1365, then yeah, okay, we'll head to the upside most likely. Let's work with that. The alternative is we break below here, and then one can work with that. And again, it's possible to buy out the lows here, stops at 1319, but I think there are better things to trade than gold right now. Here's a German DAX. German DAX, we were bearish here for quite some long time for the market to head to the downside. That happened, and then the market went up, and then quickly moved back down again. And then before the end of the day, that day when this happened on April 4th, the market quickly bounced to the upside. And following that, we moved up a little bit. And if you were short or bearish, we got stopped out here. And then since then, I'm short-term bullish, at least from a technical perspective. We haven't necessarily had sort of the most amazing momentum to the upside following the break here, but I think at least in the short term, this market could potentially head to the upside. I have highlighted several setups in the Nasdaq and then the Dow, so the US stock markets, and I like them better than German DAX, but I think the German DAX, if it pulls down a little bit, and in fact, as long as you trade above this level here, for some reason the levels are all wrong. There you go. As long as you trade above 12,147, there's no real reason to change our bias. Okay, I want to be a buyer down here, and I suspect the market could head higher. All right. Very straightforward. Okay, guys, that concludes today's market update. I don't think we have anything on the more calendar for today. I stopped following, macro fundamentals for the last few months because they don't really. The U.S. economy is doing really good, right? But where's the dollar strength? Fed has been raising interest rates, but where's the dollar strength? You see, it's sort of, if you're trading currencies, it doesn't matter any longer. It will matter probably at one point, but right now nobody cares. It matters for stock markets, of course. So I do obviously read up a bit, but not enough to know that we had retail sales. So that's on deck today. Very straightforward, higher numbers expected. You see a bit of a boost in the dollar, slightly lower numbers expected. You see a little bit of a dampening in buy demand for dollars, but I don't think this is going to change things in a major way. Unless, of course, numbers turn really, really bad. And that's sort of a overriding theme, and that is that we've been having slightly weaker numbers in the U.S., and I think that translates into sort of softer stock markets in general. But it's just a pullback from elevated levels. I mean, the U.S. economy is doing amazingly good. Even in Europe, things are improving really nicely and well. In the UK as well. I think unemployment rate in the UK is, well, is it 4.something%? In the US, I think it's about 4.1, 4.3. In Europe, it's at high levels, but in regards to, I mean, they usually have high levels anyway. So everything is on a relative basis. And from that perspective, things are doing very well. I think places like Germany is, like the US, very low unemployment numbers. So things are going all right now. Most people that want to work have a job. There's obviously sectors in the economy that are not doing too good. It's always something like that. But just look at the unemployment numbers, compare them with sort of the long-term averages, and we're not doing too bad. So I think all of this can moderate a bit, but most likely it's just going to bounce up in the next few months. So I guess that's why people don't really care about it too much any longer. So what do we do? Well, just keep an eye on the charts, see what's going on, read the technical analysis section here, join our webinars, and technical analysis I think is the way forward. It's always been good. And obviously if we can combine it with macro fundamentals, then yeah, it's good. You do have some fundamental stories. The fact that the situation in Syria, that's lifting crude oil prices. Good overall economic situation lifts crude oil prices. In crude and gold, though, we don't really have too much. And the euro is just very difficult to deal with from a macroeconomic perspective. All these guys are scratching their heads every day. Macroeconomists have not had the last, I mean, technically, they have had a terrible since 2017. They were been wrong because the basic model for forex investing is that if a country's raising interest rates, well, you buy that currency. If a country's reducing interest rates, you sell that currency. Well, the U.S. has done exactly what they should be doing. They have been doing exactly what they need to do to raise the dollar, but we're not seeing that. It's going the other way. Okay, guys, that concludes today's market update. Join me tomorrow at 9 a.m. London time as well if you're watching this presentation recorded. Don't forget to hit like. As I've been telling you guys, it's always good to see some likes. You just press here. You see, there's always one guy, and there's just one guy. I can show you the statistics. There's just one guy from a small country in Europe, Eastern Europe, and all the dislikes come from one guy. So we need to help with that. So click on like if you like it. If you don't like it, click on no or the dislike, and that can guide me further on what I should dedicate my time to. Okay, guys, if you like it, here, like, and then click on subscribe as well if you want notifications. Have a good trading day. And Omar, thank you so much for joining. Yes, my Twitter name is AlexFX00. Good morning, hi, and good morning, Antonio. So I said 10 Fed speakers today. They may communicate something. Yes, they could easily communicate something. I think most Fed speakers in general, they're very, very interested just to increase interest rates in general. And the issue is that the market knows about it already. Let me show you here. CME This is a cool tool. It's called the CME Fed Watch. It's a free tool. You can just Google for it, CME Fed Watch tool. And just the countdown to the next Fed rate meeting is 16 days and 8 hours and 49 minutes from now. And let's see if I can have this loading. So usually, people don't want to know necessarily what's going to happen today. They want to know what's going to happen next, say, 12 months. So we can get data here until, this is for the December 19 meeting for this year. So the interest rate is right now here between 150 and 75. And you can see that this is 1, 2, 3 rate hikes. So for that date, there's a 32.4% likelihood that the interest rate is going to be at between 225 and 250. And you can bring out a calculator, and you can also see, because there's a 5% likelihood that thinks that we're going to have 4 rate hikes. So 32.4 plus these guys here, 5.1, gives it a 37% likelihood of having a rate hike or interest rate at 3%. Also 3 rate hikes by the end of the year. So this is what people are going to be watching today following the Fed statement. They want to see, is this going up or is this going down? And with the help of that, if people start to price in these rate hikes, then most likely we might see some dollar strength. But the issue here is that this is already quite an aggressive position by the markets. The market already is fully pricing in at least 2 rate hikes, and with a 30% likelihood having 3 additional rate hikes. Now remember, for this year, the Fed only wanted to increase, I think it was, if I remember correctly now, it's going to be 3 rate hikes, right? And they already did increase interest rates, right? So the market is giving, with these ones, the market is predicting that with a 37.5% likelihood, we will have 4 rate hikes this year. So obviously that's quite high expectations. So imagine for some reason that most likely the numbers from the US starts to soften. Then because people are so bullish, it's likely, I think, that this could quickly sort of pull back, because that's what we're seeing in the numbers. The numbers from the US are less and less good, and overall they're less good, because when everything goes really well, everybody just gets super excited. But macroeconomic data tends to be very range bound. So when everybody thinks the economy is going really well, eventually it starts to normalize a bit. It's not like Bitcoin when everybody thinks it's going to be good and then it just becomes better and better and better and better. And then obviously you have that big rollover as you have in Bitcoin. Here is much more like people get excited and then eventually it just goes down again. And it's called the City Economic Surprise Index. You can find that online. People put that in articles and things like that. So again, I think it's very fragile. Obviously, you want to keep an eye and see, are they conforming to this view, or are they just conforming to the view that they're probably just going to do 3 rate hikes? I think most of the Fed members are happy just to stick with the idea that they're going to do 2 more rate hikes this year. So I don't really think they're going to cause the market to price in 4, because they watch these numbers as well, and it will be foolish for them to do that, because the economy can change quite a bit, and they can quickly just tell people, you know what, we might increase an additional time, and they can do that very easily. But I don't think they're going to do it this time around. So if anything, I think Fed speeches today are going to conform with the idea that we're going to have 3 rate hikes this year and not 4 as the market are predicting. So if anything, I would anticipate them to be a little bit dovish, if anything. Anyway, if they go and tell us, if they just tell us we're going to have 3 rate hikes, well, that's already priced in, so that's not going to add anything to the dollar. So that's the way I would look at it. Here's my Twitter handle, AlexFX00. Add me on Twitter. Any questions or anything like that, you can ask me there as well if you want to. Have a good day, guys. See you guys tomorrow. Thanks.